very, very careful when you get into a market like this. You got to know when to get out, and that's where we come in. So if you're a beginner and you want to start learning how to invest stocks properly and have the comfort level of knowing when to get out, when to buy, when to sell, and when to get out, contact us at philsgang.com. Join today, free for 10 days.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from. All that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
What are you, nuts? 85% of the people do not know how to get out of the market. They lose money because they don't know when to get out. I'm Phil Grandy of philsgang.com. I solved that with my Pro 2 color-coded chart. It tells you when to get out. It tells you when to get in, tells you when to add, not to add. Specifically, when do I get out? It tells you that. Check it out. Go to my site, philsgang.com. Get your 10-day free trial of my Pro 2 color-coded chart and a membership.
I've been a Phil's Gang member since 2014. Over that time, I've generated over six-figure profits. Following Phil, his charting system has really been a huge impact on my career and my life. I would recommend Phil's Gang to the mom and pop out there. I would recommend it to parents teaching their children. I would recommend it to grandparents. If you really trust in their system, you will do well.
For more information, go to philsgang.com or give us a call at 877-600-4264.
Did you know breast cancer kills 113 people every day? That's unacceptable.
African American women die from breast cancer nearly 41% more than Caucasian women.
That's unacceptable.
Breast cancer is the leading cause of all cancer deaths for Hispanic women.
Breast cancer is unacceptable.
Together with Susan G. Komen, we're committed to reducing U.S. breast cancer deaths by half.
And we're going to do it by 2026.
Visit Komen.org/unacceptable.
When the market's open, we watch the market all day long. And when we see there's an opportunity for a stock, and it's a stock that we've been following, there's a lot of stocks we put on our watch list, and it has to hit a certain criteria. Then when it does, we alert you. You immediately get an alert that says, we bought this stock, X stock, at $30. So you get an alert immediately. What's better than that? I mean, nobody does that for you. But the most important thing, they'll say, okay, here's why we're getting out now, or here's why we're taking profits. I think it's going to go down. Look, the most important thing is this. I want you to be prepared for when the market does tank or rally, that you're with us, Phil's Gang. 877-600-GANG. Join my gang right now, Phil's Gang. 877-600-GANG, and you'll be in position, and you'll sleep at night, and you don't have to worry.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264.
Did you know breast cancer kills 113 people every day? That's unacceptable.
African American women die from breast cancer nearly 41% more than Caucasian women.
That's unacceptable.
Breast cancer is the leading cause of all cancer deaths for Hispanic women.
Breast cancer is unacceptable.
Together with Susan G. Komen, we're committed to reducing U.S. breast cancer deaths by half.
And we're going to do it by 2026.
Visit Komen.org/unacceptable.
Remember, when this market crashed in 2009, it should have never crashed, because the chairperson of these two committees, their job was to protect consumers, protect our investments, and they're supposed to ensure that our investments are being monitored. Where were they in 2009 and 2008? They weren't anywhere, because they don't do that. They take care of themselves. They protect themselves. They become richer. So you can't depend on these crooks in Congress. The stock market is a great place to be, but you just got to know this is a different market than your grandfather's market. So why don't you, for 30 days, join my gang, 877-600-GANG, try it for 30 days, $39.95. Follow me. I tell you when to buy, when to sell, when to add, and when to run like hell. All I ask you, start making money. Please remember St. Jude.
Don't wait. Join Phil's Gang today and make profits. Go to philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money, money, money's coming to me. Money sets me free. I'm a money magnet. Money, 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 money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grandy.
And I mean, you think about inflation. Right now you have higher cost on used cars, things like lumber. Why? Because the economy's taking off. It's heating up.
Heating up? Are you nuts? Heating up? This is what I hate about these people who are on these fake business news networks, who they don't have any idea what they're talking about. Heating up? It's not heating up. This economy is stone cold. Again, hot economies don't need to raise $2.4 trillion in 12 months, $10 trillion in 100 days, which is debt. Hot economies don't need zero rates through quantitative easing. Hot economies don't need an injection, as I said, 12 trillion stimulus programs in 100 days. Stimulus is life support. This economy is so cold, they got to keep interest rates at zero. Are you kidding? And all this money they're borrowing and borrowing? And here's the thing. Hot economies don't need the Fed to monetize the government's debt. Now, what's that all about? Most people don't even understand what it is. But before I begin that, remember yesterday I told everybody, I said, we're talking about, first of all, yesterday we talked about the Federal Reserve. We need to abolish them because their monetary policy is killing us, is killing Main Street, making the wealthy very wealthy, but making Main Street very poor, especially with inflation. I also said they're going to turn around this market and they're going to run it back up. Especially they're going to try to run the tech stocks back up, the big tech stocks back up. This is what you want. You want to run up and then fail. That's what happened in 2008. That's what happened to dot-coms before that. This is what you want. You don't want the market to keep going down. The test isn't going down. The test is going up. If they can't make new highs, then what happens is people panic and they start selling big time. So the market is doing exactly what it's supposed to do, sending the signals of a crash. That's right. You don't have to believe it, but that's what's going on. So today they're trying to run these big tech stocks back up and all these stocks back up, and it's not working. And all you have to do is take a look at the volume. Was there more people selling the market when it was going down 600 points, or more people buying the market on the way back up today? What they are doing, the Federal Reserve and the plunger team have gotten together. They try to stop this market from selling. They simply go in and they buy futures. Simply, they go and they buy a stock that's at $40, and they say, in the future, in June or July, I'll pay $60 for it. And that's how you get these rallies. After you had a 600-point rally drop yesterday, now today it's back up 554 points. So how do you get such a turnaround? That's how they do it. But this thing about the hot economy, it's so cold. You don't keep interest rates at zero when you have a hot economy. So let's talk about this monetization of debt, because this is very important. Because monetization of debt kills you. If you have a hot economy, you don't monetize the debt. Now, monetization of debt is so simple. When the government needs cash, because they're always broke, they'll ask you, hey, can I lend you some money? And you say, sure. and they'll give you this Treasury note. So you get the Treasury note. It's debt. You're owed debt. So the government now, its debt has increased. So now what they want to do is they want to sell that debt. The government wants to sell that debt. Well, there's nobody out there to buy the debt. The only people out there to buy the debt is the Federal Reserve. So what they do is turn around and they go in and they print all this money, which is going to kill Main Street because they devaluate the dollar. They print all this money and they go in and purchase the debt. And then they put it on their balance sheet. By purchasing debt, which are these treasuries, the debt, it keeps interest rates down to zero. So they can loan this money to the very, very wealthy, loan it to corporations so they can buy their own debt back, stock back, loan it to Wall Street so they can keep speculating, driving the stock market up, creating an illusion the economy's terrific. When it has nothing to do with the economy, it's just the stock market. Now, let's talk about the consequences of this monetary policy, what they call monetizing debt, buying all the debt from the government. First of all, because our Congress spends with no constraints, this is the problem, which means that if the Federal Reserve, by purchasing this government debt, okay, as I say, first of all, if they didn't purchase it, there'd be a huge glut of bonds on the market, which would cause bond prices to sink like a flying tank, causing inflation rates to rise. Rates could go up as high as 20%. We saw that in the 70s. Now, the Federal Reserve, when Bernanke, when he introduced this policy of QE, now remember, if he didn't introduce this policy, our Congress would have to constrain its spending. This is why this is a very, very bad policy and why you got to abolish the Federal Reserve. By doing this, they're saying to Congress, go spend all the money you want. So Congress doesn't have to constrain its spending. It doesn't have to constrain its waste. So if they didn't do this, Congress would have to contract the size of government. So what this does, this poor policy, it says to Congress, spend all you want because we're going to go and buy your debt. Even though nobody else will buy your debt, hey, we'll step in and buy it. Now, if they didn't step in and buy this debt, or if they stopped buying the debt, we'd go into such a deep recession, it would be incredible. So now they turn around and I say, keep spending all you want, Congress. Keep spending all you want. Grow the government to any size you want. This has been the worst policy. It's killing us. It's always helping the rich because they're getting interest rates at zero, because the wealthy make their money from the stock market, the wealthy make their money from investments and coins and everything else, art, all that, which Main Street gets screwed. Now, here's the problem. When you keep on telling the government, go ahead and spend all you want, because we, the Federal Reserve, we're going to come in and take it from you, your debt, and we're going to put it on our balance sheet. So keep spending. Well, here's the problem with that. In return, what happens when they keep doing this, our debt to our our debt ratio to our growth, if it's below 90%, that identifies if it's below 90%, it identifies our productivity is strong and our economy is growing on an annual basis 3 to 5%. But if, on the other hand, if the debt to the ratio is above 90%, that means the economy hardly can grow. That's why we haven't had growth. That's why Obama was called the worst president ever, because he was the first president that couldn't hit 3%. Because the reason he couldn't hit 3% because the ratio of debt to economic growth is below 90%. As a matter of fact, it's gotten now worse. It's 101%. So you can't get growth. So all you have is this stock market keeps soaring, but it's all debt. But you're going to have to pay this back. It's all debt. It's unbelievable. People have no idea what's going on. More when I get back, and we'll talk about the stocks.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Remember, when this market crashed in 2009, it should have never crashed because the chairperson of these two committees, their job was to protect consumers, protect our investments, and they're supposed to ensure that our investments are being monitored. Where were they in 2009 and 2008? They weren't anywhere because they don't do that. They take care of themselves. They protect themselves. They become richer. So you can't depend on these crooks in Congress. The stock market is a great place to be, but you just got to know this is a different market than your grandfather's market. So why don't you, for 30 days, join my gang, 877-600-GANG. Try it for 30 days, $39.95. Follow me. I tell you when to buy, when to sell, when to add, and when to run like hell. All I ask you, start making money. Please remember St. Jude.
Don't wait. Join Phil's Gang today and make profits. Go to philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264.
Hi, I'm Phil Graney, philsgang.com. You probably heard me on the radio talking about investing in stocks and trading stocks. Well, this is a special message that I am sending out to you. You, the person who is the beginner, who are getting excited. You're seeing every day the stock market going up, never comes down, keeps going up because of the tremendous stimulus that the president is putting into this market. He wants to continue this market going up while the economy's going down. And that's what it's doing. The economy's going straight down. You know, banks right now, worst ever. They've gone down 40%. I mean, everything's going down. Companies aren't making money, but the stock market's still going up. And you got to be very, very careful when you get into a market like this. You got to know when to get out, and that's where we come in. So if you're a beginner and you want to start learning how to invest stocks properly and have the comfort level of knowing when to get out, when to buy, when to sell, and when to get out, contact us at philsgang.com. Join today, free for 10 days.
What if you could have an in-depth understanding of the stock market just like the pros? Well, thanks to Phil Grandy and philsgang.com, you can. philsgang.com offers comprehensive, up-to-date market information designed to help you understand and anticipate market behavior. With philsgang.com, you'll build your investing confidence even through down cycles and periods of uncertainty. Go to philsgang.com. philsgang.com today. 877-600-GANG. 877-600-4264.
Hi, I'm Phil Graney, philsgang.com. You probably heard me on the radio talking about investing in stocks and trading stocks. Well, this is a special message that I am sending out to you. You, the person who is the beginner, who are getting excited. You're seeing every day the stock market going up, never comes down, keeps going up because of the tremendous stimulus that the president is putting into this market. He wants to continue this market going up while the economy's going down. And that's what it's doing. The economy's going straight down. You know, banks right now, worst ever. They've gone down 40%. I mean, everything's going down. Companies aren't making money, but the stock market's still going up. And you got to be very, very careful when you get into a market like this. You got to know when to get out, and that's where we come in. So if you're a beginner and you want to start learning how to invest stocks properly and have the comfort level of knowing when to get out, when to buy, when to sell, and when to get out, contact us at philsgang.com. Join today, free for 10 days.
Did you know breast cancer kills 113 people every day? That's unacceptable.
African American women die from breast cancer nearly 41% more than Caucasian women.
That's unacceptable.
Breast cancer is the leading cause of all cancer deaths for Hispanic women.
Breast cancer is unacceptable.
Together with Susan G. Komen, we're committed to reducing U.S. breast cancer deaths by half.
And we're going to do it by 2026.
Visit Komen.org/unacceptable.
When the markets open, we watch the market all day long. And when we see there's an opportunity for a stock, and it's a stock that we've been following, there's a lot of stocks we put on our watch list, and it has to hit a certain criteria. Then when it does, we alert you. you immediately get an alert that says, we bought this stock, X stock, at $30. So you get an alert immediately. What's better than that? I mean, nobody does that for you. But the most important thing, they'll say, okay, here's why we're getting out now, or here's why we're taking profits. I think it's going to go down. Look, the most important thing is this. I want you to be prepared for when the market does tank or rally, that you're with us, Phil's Gang. 877-600-GANG. Join my gang right now, Phil's Gang. 877-600-GANG, and you'll be in position, and you'll sleep at night, and you don't have to worry.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264. Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call, 877-600-4264. Now, here's Phil.
And welcome back to Phil's Gang. So back in 2008, when the market got crushed, Bernanke introduced QE, monetization of debt, all these fancy words. Now, all it means is, again, when the government runs out of money and it's in trouble, they ask you and me to loan them money. They give us a certificate, a treasury. When we loan them money, the government owes that money back. That's called debt. Now, the problem, they got to find somebody to sell that debt to. They just can't keep going up, debt. So what they did is come in with a policy. Bernanke in 2008 said it would be temporary, because it would be you can't do it more than temporary, because it'll kill you, kill the economy. Only the rich get richer and the poor gets poorer into this. Because once you take that debt, the Federal Reserve turns around and goes in and buys the debt, shifts it over to their own balance sheet, and from 2008 to today, we've gone up from $850 billion to almost 4.3 trillion. This is supposed to be temporary. Because the problem with this, when you keep doing that, the only thing that goes up is the stock market. Because when you buy that debt, when they buy that debt from the government, they're buying the treasuries. And when you buy the treasuries, the idea is to get interest rates down to near zero. Then they take that money, the banks, and then they go out and they speculate. They take the money and buy their own stock. They buy their own stock. That's how the stock prices keep going up. They keep buying their own stock. If they didn't do this, the interest rates wouldn't be at zero, and they wouldn't be able to do that, and the market wouldn't be going up as it is. See, the market's going up for the wrong reasons. But people in the market, like myself, or people in what, they don't care, because you can make a ton of money on the way up. But there's only a certain group of people that make the money. The people who are in stocks. And the average worker doesn't own stock. Yeah, you may have a 401k. And 50% of the people who have 401k, they don't even contribute to it. So now what happens is, when they take the debt and put it on their balance sheet, the Federal Reserve, they keep, and then as they keep growing that debt, and the Fed keeps going and buying it, they keep growing the debt, they keep selling these treasuries. But what happens is the debt still is growing, because the debt to our economic growth, the ratio gets out of balance. And when the debt to ratio is 90, our debt to our economic growth is below 90%, that's a good thing, because then we can grow 3, 4, 5%. When it's above 90%, we can only grow 2, 2.5%. You can't even hit 3%. We're at 101%. So we're not growing. The only thing that's growing is the stock market for all the wrong reasons. Now, the biggest problem with this is that the money that they get, the Federal Reserve gets to buy this debt, they have to print it. And when they print all this money, the value of the dollar drops. Inflation then goes up. And that kills Main Street. Inflation is brutal. Inflation is terrible. Inflation's a tax, because Main Street has no way to increase their income to offset the inflation. Now, Bernanke understood all this. And he said, well, this is going to be temporary. It's going to be temporary. Didn't we just hear that the other day about inflation is going to be temporary? Temporary, he said. Really? It's been 13 years. And then finally, about, 5-6 years ago, they brought Bernanke into Congress, and they asked him a question.
Wall Street has benefited more than Main Street has? I don't think so.
The congressman said, Wall Street or Main Street benefited more, or Wall Street benefited more? He said, oh, no, he's a liar. And today, look what's going on. He lied and said this would be temporary. Only do this for about 12 months, he says, because he knows this isn't any good, because he knows what it does. It takes the incentive away from Congress to constrain their spending. They have to constrain it. It takes the incentive away to shrink the government, constrain the spending. And when they do that, then savings grow. Our savings grow. Money goes to the bank. See, the problem is in our banks right now, nobody keeps money in the bank because they always buy bonds because the rates are higher. So that kills the economy because the local business, he wants to add on to his restaurant, goes to the bank. There's not enough money there, so they want high interest rates so that they don't deplete the money that's there. So all of this has been for one reason only. Keep driving that stock market higher. So the wealthy gets wealthier, people on Main Street get screwed, and what they do to make sure that people on Main Street don't catch on, they make sure those interest rates are low, their credit's low, so they can go buy a new car. They can buy a new Jeep. They can buy new rims. They can buy a Bulldog with a chain and tie it to the Jeep on Friday night. Keep people happy. Just keep people happy. They don't know the difference. Well, people are smart. They know the difference. So now what's going on, we reached the point that we have a stock market after all these years that's exploded, but we have an economy that's contracted. It's the economy that grows the economy, not the stock market. The stock market grows wealth of a very small group of people, the top 1/100 of 1%, and the top 1%, and the top 10%. Nobody else participates. And why do you think the job numbers went down? Because we're not growing the economy. And again, they lied. They kept saying every time the job numbers came out after the so-called pandemic is going down, they said, oh, look at the jobs. Wow, look, they went up big. Holy macro. The next month, well, look at this. Next month, they went up big. Wow. These are all new jobs. No, they weren't. These are the same people who lost their job just going back to work. But they would frame it as new jobs. So now all of a sudden they lied and said, boy, we've got to track 1 million jobs now. And they got 266,000 jobs. So how do you make money? Well, first of all, you know that at some point you're going to have the biggest crash ever because they can't stop this now. After 13 years, they can't stop this. There's no way to stop the monetization of debt. They got to keep doing it or we'll go into a depression. So what do we do? I'll explain what we do when you get back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Hi, I'm Phil Grain at philsgang.com. You probably heard me on the radio talking about investing in stocks and trading stocks. Well, this is a special message that I am sending out to you. You, the person who is the beginner, who are getting excited. You're seeing every day the stock market going up, never comes down. It keeps going up because of the tremendous stimulus that the president is putting into this market. He wants to continue this market going up while the economy's going down. And that's what it's doing. The economy's going straight down. You know, banks right now are the worst ever. They've gone down 40%. I mean, everything's going down. Companies aren't making money, but the stock market's still going up. And you got to be very, very careful when you get into a market like this. You got to know when to get out, and that's where we come in. So if you're a beginner and you want to start learning how to invest stocks properly and have the comfort level of knowing when to get out, when to buy, when to sell, and when to get out, contact us at philsgang.com. Join today, free for 10 days. Remember, when this market crashed in 2009, it should have never crashed because the chairperson of these two committees, their job was to protect consumers, protect our investments, and they're supposed to ensure that our investments are being monitored. Where were they in 2009 and 2008? They weren't anywhere because they don't do that. They take care of themselves. They protect themselves. They become richer. So you can't depend on these crooks in Congress. The stock market is a great place to be, but you just got to know this is a different market than your grandfather's market. So why don't you, for 30 days, join my gang, 877-600-GANG, try it for 30 days, $39.95. Follow me. I tell you when to buy, when to sell, when to add, and when to run like hell. All I ask you, start making money. Please remember St. Jude.
Don't wait. Join Phil's Gang today and make profits. Go to philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264.
PhilsGang.com is not the only way you can stay in touch with what we do throughout the day. With today's social media, you can stay up to date with Phil's Gang current events. You can find Phil's Gang on Facebook, Instagram, Twitter, YouTube, and more. Phil's Gang Radio Show is broadcast live Monday through Friday from 3 p.m. to 4 p.m. Eastern Standard Time on Facebook, Periscope, and, of course, YouTube. Don't forget to hit that like button and subscribe. Go to philsgang.com and find our social media buttons at the top left-hand corner of the site. philsgang.com and Phil's Gang Social Media, keeping you connected.
With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG.
What, are you nuts? If the stock market can make you so rich, especially Apple and Microsoft and Google and Amazon and the rest, why are so many Americans poor? If the 401k promises you a retirement, then why is it we are in a retirement crisis? Here's the answer. Because 85% of you get out of the market too late. I fixed that with my color-coded chart, which tells you when to buy, when to sell, and when to get out. That's right, when to run like hell. Check it out. You get a free membership and the free color-coded chart for 10 days. Check it out, philsgang.com.
With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG. Welcome back. Learn, invest, and make profits with Phil Grandy. Simply go to philsgang.com. Now, here's Phil.
Happy days are here again for Americans.
Happy days are here again. The skies above are clear again. Let us sing a song of cheer again. Happy days are here again.
Well, I hate to disappoint you, but happy days aren't here again. Now, let's go back, and everybody's saying this is the biggest housing boom ever. Not true. First of all, let's look at the numbers. This is a different boom. This is a much different boom. When you look at the numbers, you have unemployment is at 4.7%. Okay, interest rates are at. Interest rates are at 1.69. Now, if you go back, let's go back to when we had the housing boom back in 2001 to 2006. Unemployment was 4.7%. Interest rates were 6.4%. Homeowner rate was 68.8%. We had we had interest rates, about the same. The homeownership rate was about the same. But what the difference is who's buying these homes. That's the difference. The difference is you got the wealthy buying these homes. Again, the numbers show it. If you go back 2006, I just found the numbers right here. I've been trying to find it. I just found it. Unemployment was 4.7%. Unemployment today is 14.7%. Interest rates back then was 6.4%. Today it's 0.25%, 0.25%. Now, that's a big difference. So how can we have a housing boom with unemployment 14.7%, and back in 2006 was 4.7%? What's going on? Well, because it's a different buyer. Because it's a wealthier buyer. It's a person who's owned his home for like 13, 14 years. He's been in the city, and now he wants out of the city and goes to the suburbs. But he's got a lot of equity in his home. He moves that equity out to the suburbs, and he's buying. You got the wealthy buying. Because remember, the wealthy, they're getting wealthier. Stock market alone is making tremendous wealth for people. For the wealthy, for the top 10%. Nobody else, because not many people are in the stock market. Even with the 401ks, half the people who have a 401k don't even use it. They can't contribute. So my point is, there's not a big housing boom going on. Once these houses are filled, once they moved from the city to the suburbs, it's over. And the biggest problem we got right now is, again, the average person who's buying a house right now, he's making $150,000 a year or more. The guy back in 2006, he could make $45,000. They give him a home. So this is a smaller target of people who have wealth, and they're moving from the cities to the suburbs. That's it. That's the deal. When you know you got a great housing boom, is when you have 47% of the housing market is first-time home buyers. That's not happening. That's not happening. They can't afford a house. The first-time home buyers can't afford a house. Because, again, the unemployment rate is 14.7%. Not like it was back in 2006 of 4.7%. That's the real unemployment rate, not the lies they give you. So we got a real problem here. Because of the policy of the Federal Reserve, which why you got to abolish the Federal Reserve, because it gives the government no incentive to stop their spending. It gives them no incentive to keep government small. That's what we need to have a strong country for everyone. For everyone. But that's not the policy. The policy is just keep borrowing. Just keep borrowing. Keep expanding the government. And inflation just keeps going up. And as I said, your debt ratio to economic growth, if you stay below 90%, you got a good economy. You can grow it 3, 4, 5%. If you get above it a little bit, it drops to around 2%, 2.3%. We're at 101%. You can't grow it. So what do you do? You got to learn how to short the market. Now, like today, for example, I told you yesterday they're going to start talking about you got to get back into tech. And I said, you're going to have a head fake rally today. And the tech stocks are going to go back up, and people are going to turn around. Here, listen to this.
So don't give up on tech.
Here we
It's
go.
always the most innovative companies on the planet Earth.
Okay, so that's what they're starting again. Don't give it that. This is the deal. This is when you should buy. They're on sale. And you get all these people don't know what the hell they're doing. All they know is the names Amazon, Google, Netflix, Facebook, Microsoft, Apple. It's all they know. They've known those names for 13 years, burned into their brain. So they're running around, they're borrowing money, and they're buying on margin. and they're going to get killed. They're going to get killed. So you can't, when we say the inflation is transitory, that's the biggest lie. As Bernanke said, that monetization of debt was transitory, was temporary. QE was transitory. Well, guess what? Here we are, 13 years later, and look what the hell's going on. We got inflation starting to go through the roof. But they've been lying about the inflation. And we don't have wages going through the roof. But we got prices going through the roof. We're heading for a very bad time. But the fake business news network is not going to tell you the truth. I'll tell you the truth. So what do? You got to learn how to sell a stock short. It's that simple. That's all you can do to defend yourself. And for example, the stocks we were in, XLI, we're up when it turned green, it went up 17%. XLB, that's materials, when it turned green, went up 18%. When we got into VNQ, which are REITs, okay, guess what? Went up 11%. When it turned green, we had the green for 11%, and we bought steel, SLX, it went up 42% from the time it turned green. Our treasuries went up 24% since the time it turned green. So I had everybody buying where the money was going. Money was rotating out of big tech into these kind of stocks, and they're rotating out of growth stocks. All these big growth stocks, like Shop and all the other ones, and Tesla, they're pulling money out. So you got to know, when is money coming out of the big tech stocks? There's 11 sectors in the market. The biggest sector for the last since 2013 has been the tech sector. Everybody's in the tech sector. Everybody. And this inflation is going to keep going up, and it's going to kill. You see what's going on with the market. Now they're saying, oh, don't worry about inflation. It's temporary. Bernanke said in 2008, hey, don't worry about monetization of debt. It's temporary. Oh, really? Look where we are now. The Federal Reserve has on their balance sheet, went from $850 billion in 2008, and now we're at $4.2 trillion. The Federal Reserve went in and bought all these treasuries. There's no other buyers around. They have to, because their policy's terrible. If they don't buy it, then the stock market, then interest rates are going to go to 20%. They keep buying. But how do they buy it? They got to keep printing money. And they can't print money fast enough to stop this inflation, because everybody's going to be dumping their bonds all over the world. And you're going to have one hell of a crash. So what you want to know, you just got to always know which stocks are rotating to where. This is what we do every day. Every day we work on this. So our members know where the money and the market is rotating to. There's 11 sectors. So we had everybody, we had them correct. We had them in the industrials, we had them in materials, we had them in the REITs, we had them in steel, we had them in transports, and they did beautifully. Now, I'm not saying every member made 42% in steel. I'm not saying every member made 18% in the materials. What I'm saying is, when it turned green, we had a profit center of 18%. Steel, we had a profit center of 42%. It depends on the person when they want to buy it, when it's in the green. But this is what you have to know how to sell short, or you're going to be dead. Be right back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG. Short on time but want to invest in the stock market? Let philsgang.com help you. For only $39.95 a month, you get complete access to all of Phil's powerful investing programs, videos, and resources.
That works for me. Log in, watch the videos, and make profits.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. philsgang.com.
Warning. Google, Apple, Microsoft, Netflix, Facebook, all these hot stocks are going to crash. They're going to drop as much as 60, 70%. Hi, I'm Phil Grandy, philsgang.com. Exactly what happened in the dot-com days is going to repeat itself. Remember, 85% of people lose money in the stock market because they don't know when to get out. I fixed that with my color code technology chart. It tells you when to buy, when to sell, when to add, and when to run like hell. That's right. Make sure you check it out. It's free for 10 days, philsgang.com. Hi, I'm Phil Graney, philsgang.com. You probably heard me on the radio talking about investing in stocks and trading stocks. Well, this is a special message that I am sending out to you. You, the person who is the beginner, who are getting excited. You're seeing every day the stock market going up, never comes down, keeps going up because of the tremendous stimulus that the president is putting into this market. He wants to continue this market going up while the economy's going down. That's what it's doing. The economy's going straight down. You know, banks right now, the worst ever. They've gone down 40%. I mean, everything's going down. Companies aren't making money, but the stock market is still going up. And you got to be very, very careful when you get into a market like this. You got to know when to get out, and that's where we come in. So if you're a beginner and you want to start learning how to invest stocks properly and have the comfort level of knowing when to get out, when to buy, when to sell, and when to get out, contact us at philsgang.com. Join today, free for 10 days.
Short on time but want to invest in the stock market? Let philsgang.com help you. For only $39.95 a month, you get complete access to all of Phil's powerful investing programs, videos, and resources.
That works for me. Log in, watch the videos, and make profits.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. philsgang.com.
Hi, I'm Phil Graney, philsgang.com. You probably heard me on the radio talking about investing in stocks and trading stocks. Well, this is a special message that I am sending out to you. You, the person who is the beginner, who are getting excited. You're seeing every day the stock market going up, never comes down, keeps going up because of the tremendous stimulus that the president is putting into this market. He wants to continue this market going up while the economy's going down. That's what it's doing. The economy's going straight down. You know, banks right now, worst ever. They've gone down 40%. I mean, everything's going down. Companies aren't making money, but the stock market's still going up. And you got to be very, very careful when you get into a market like this. You got to know when to get out, and that's where we come in. So if you're a beginner and you want to start learning how to invest stocks properly and have the comfort level of knowing when to get out, when to buy, when to sell, and when to get out, contact us at philsgang.com. Join today, free for 10 days. Hi, I'm Phil Grandy. Is your business prepared to respond to any emergency in the workplace? Well, you better be. Let over 30 years of law enforcement experience go to work for you. Boyd Investigative Group is here for all your business security needs. I know. I use them. They're terrific. Call today for your free confidential consultation. 941-724-4535. That's 941-724-4535. Or visit them on the website, BoydInvestigativegroup.com.
License number A1900020.
Welcome back. Learn, invest, and make profits with Phil Grandy. Simply go to philsgang.com. Now, here's Phil.
Happy days are here again.
Yeah, happy days are here again. Sounds just like 1929. Smells like it. Looks like it. Happy days are here again. Let's think about this for a moment. Are you kidding me? Auto debt, a record $1.3 trillion. $1.3 trillion. And we have a record delinquencies. Household debt, a record $14 trillion. Record delinquencies. Housing debt. Household debt, $14 trillion. Housing debt, $10 trillion, with a record amount of people that they have not been able to pay their payments in 90 days, over 90 days. Record amount of people who have not paid their payment in 90 days. We mean happy days are here again. Margin debt, $814 billion. Now we're almost at $1 trillion. In February 2020, we went from $545 billion in 2020. We went up to $814 billion now in 2021 February, and now we're almost there $1 trillion. Are you kidding? They're buying all these stocks with borrowed money. Now think about this. For every $1 debt the government incurs, each American is on the hook for it. That's $85,225 debt for every American citizen. What do you mean happy days are here again? Now you say, well, I don't have to write a check for $85,000. Well, yes, you do. When you go to the gas pumps today, when you go buy some chicken today, when you go get a prescription today. Are you nuts? What are you, nuts? Your happy days are here again. Oil prices up 70. Gasoline prices up 70%. Housing prices up 15 to 30%. Drug prices up 108%. Pork 50%. Beef 74%. Chicken 33%. But here's the thing. When all these prices are going up for housing, people are overpaying for their houses. They don't get it. They're overpaying. Lumber is not going up. Lumber went up, increased, what was it? How many percent you gave me? Lumber was about 230% in a year. That's not because of the demand. That's not because of just the demand. It's inflation that drove up those prices. And you hear what this guy said. He said, well, look at it. Housing's up big time, right? They're really on fire. Really on fire. Housing's really big right now. No, it's the inflation. Now, here's what's going to happen. We're going to make a load of money shorting lumber. It's going to stop. This is just the same thing that happened to .com, same thing that happened to HousingCon. All these people are buying these homes. But the difference with the housing market, though, we got the difference now. These people who are paying for homes now, who are moving from the city, going into the suburbs, they're overpaying 15 to 30%. They're overpaying. But that's okay because they're going to stay in the house a long period of time. They're not buying to speculate. They're not buying to flip it. So this boom is much smaller than the other boom. And the big part we're missing in this boom is the first-time home buyer that makes up 47% of the housing market. They're gone. So this is it's like a specialty market. That's it, period. Our budget deficits, okay, 1.7 trillion. Our debt to GDP ratio, I just told you, 101%. This is insane what's going on. All people are looking at is the stock market. Now the stock market is ready to collapse. You got all the signs. So what you got to do is like right now what's going to happen today, and I said to you, today and Friday, I said, you watch. This was yesterday when we were down 600 points. I said, you watch Thursday and Friday. I said, you're going to see the market rally. You're going to see the market rally. Because first, the plunger team is going to go in and start buying futures to stop the crash. They're going to start buying futures. And that's exactly what they do. So they go in, and if a stock is at $25, they'll say, the plunger team will go in and they'll buy futures. Say, well, I'll tell you what we'll do. I'll buy that stock in June for $50. So the shorts start covering, and it pushes the market up, all artificial. So if you're in any stock, like let's say you're in D.H. Horton, and the high on D.H. Horton was at $106, we'll say. Now she dropped back down to $93. When she starts going back up today, if you're getting in today, you're nuts. You're nuts. Because here's the thing. One, you don't understand because you don't have a chart to show you because you don't have my chart. That the stock is going up, but it's going up on a lot less volume than when it came down yesterday. There was more people selling yesterday than buying today. But the stock is going up. People see that. And same with the tech stocks. Everybody's going to be all excited, believing, oh, this is it. It's over. Tech's going back up. I'm going to become a millionaire. No, you're not. If you bought Amazon today, you're screwed. If you bought Google today, you're screwed. Because you're going against the trend. You're going against the flow of the money. But they're not going to tell you that on CNBC. They're not going to tell you that on Fox. They're not going to tell you that on Bloomberg. They need you to keep pushing these stocks back up because the big tech is the leader of this whole stock market since 2013. And if this collapses, which is going to collapse, because yields are going to keep going up, just build a little chart and follow the 10-year Treasury yield every day. Remember, we were 85 basis points for almost 7-8 months. Then when the markets crashed, February down to March 2020. From March 2020 on the way up, it was at 85 basis points. It went to 100 basis points by the time we hit January. And then it hit 172 basis points in April. And then they kept trying to get it down. They brought it down to 150, 155. And today, the yields are back up to what? 169, 170, almost right where we were in April. They can't get these yields down fast enough. They can't print money fast enough to get these yields down. And they're out there printing money, and the Federal Reserve keeps going in and keep buying all the debt. So here's what the government's doing. The government's saying, loan me money. Then we loan them money, and that's our debt now, right? And that's debt the government has to pay us back, so that's debt. Debt keeps climbing, right? And then the Federal Reserve runs over and says, I'll buy your debt from you. I'll buy the debt from you, Federal Reserve. Don't reserve. From the... they'll buy the debt from the government. I'll keep buying it. We'll put it on our balance sheet. Nobody will know the difference. Well, all that printing of money to do that is going to keep inflation going up. So just chart the 10-year Treasury yield, and you know exactly when the market's going to crash when we hit 200 basis points. So last week we were at 150 basis points. Today we were at a high of 172 basis points in April, and now today we're at 169 basis points. So they're going to keep trying to keep that below 2 because they know once we get above 2, 2.1, 2.2, the market's going to crash. Has no choice. Because again, we can't grow the economy. What people don't understand, you gotta grow the economy. You can't just grow the stock market and pretend the stock market's the economy. And that's what they've been doing. They lie to you every day. I don't care who it is on Fox Business. I don't care who's they lie to you. They want you to think the stock market's the economy, so you go buy a car. So you go buy a snowmobile, or whatever you're going to buy. So the opportunity to make money is incredible, but you got to know how to make money when the market's going down, because that's where we're going. We can't go up with this kind of debt. Just check it out yourself. The economy can't grow when the debt, to economic growth, the ratio is above 90%. It's impossible. Now they're saying, yeah, but we're at 6-7% right now. Wait a minute. That's not sustained. You can't sustain that. Of course you're at 6, 7, 8% because we came from such an exaggerated low. It's like taking a tennis ball and going up on a ladder 10 feet high, and you drop it, it goes down 10 feet, comes up 9 feet. Goes back down, comes up 8 feet. But eventually it goes down, dribble, and it goes back to right where it should be. And that's where we're going to be. We're going to be at 1.8%, 2% if we're lucky. But they're pushing that we're at 6, 7% because they're lying to you. They know the push in GDP, the growth has come from such a low level, they're distorting it. They're lying to you. And they want you to think the stock market's the economy. You got to fool them. You got to make money by learning how, when the market starts to crash, you simply short it. It's so easy to do, especially with our color-coded charts. It tells you exactly when that stock is going to break and going to go down. If you're in a stock and it goes up, you're in a stock and it went up one day $2, next day $3, and then what happens, what you do, because you don't know how to short, the next day it goes back down $2, you get panicked. You get scared. Get me out. Because you see the stock went from $10 to $15, now it goes down to $14. You're going, get me out. Because you don't know that. Why get out? It's in trend, but you don't even know what trend is. But we do. The color-coded chart, you're never wrong. Always tells you where the trend is. So stay in. And then you just have to switch your position to short. We do this every day. Once you're our gang member and you're making money, please remember St. Jude. I'll see you on the chart. Don't believe anything you hear on Fake Business News Network.
You have been listening to Phil's Gang with your host, Phil Grandy, on the Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.